Morgan Stanley is crashing crypto. And it even looks like they're behind the October 10th flash crash for Bitcoin. And the reason why is Morgan Stanley's MSCI index is likely to kick out crypto treasury companies. If they do decide to exclude digital asset treasuries, index tracking funds would need to sell, and that alone creates meaningful pressure on the affected names. Now, MSCI stands for Morgan Stanley's Capital International. And there's some breaking news involving this MSCI, and then we're going to look at the charts and see how low can Bitcoin go, because this news is affecting the markets heavily. And right now, Morgan Stanley Capital International is reviewing whether to exclude digital asset treasury companies, firms like MicroStrategy that hold Bitcoin, comprising more than 50% of their balance sheet. And this is going to extend to other digital asset treasuries as well, but MicroStrategy is going to have the biggest impact. Now, a decision on this move is expected by January 15, 2026, and if approved, this could force billions of dollars in outflows from MicroStrategy alone, with $11 billion if you include all of the digital asset treasury companies. Now, I even said Morgan Stanley might be behind the October 10th flash crash for Bitcoin. Well, this is why. Their announcement was actually made on October 10th, but JP Morgan, they're only reporting it today. And if you look at the exact timestamp, this dropped minutes before the October 10th flash crash. So insiders on Wall Street were given this information ahead of the normal market, and now we're starting to see maybe a lot of that manipulation to the downside was exactly that, manipulation. Now, Michael Saylor had a response to this, and he said, "My conviction is Bitcoin is unwavering." Now, this came from a Wall Street Journal interview. They messaged him over the email, and so let's go ahead and jump straight to this. So Michael Saylor defended his business model of strategy and said his Bitcoin buying company won't change course if it is dropped from the influential stock indices. Now, like we stated earlier, they have proposed cutting digital asset treasury companies from these benchmarks. But Michael Saylor told the Wall Street Journal in an email that Strategy is an operating company. In addition to the Bitcoin stash, we have enterprise software division. Index inclusion or exclusion doesn't alter our strategy, our operations, or our long-term conviction in Bitcoin as superior capital. So if Strategy is cut from this MSCI index, it could see $2.8 billion in passive outflows. But now let's go into the Bitcoin chart. There are two things that I want to show you saying how low can we go? How much lower do we have to go? We kind of use history. So first thing I want to show you is this on the bottom. This is the MACD. It stands for Moving Average Convergence Divergence. Now we just hit a low level on the daily MACD that we have never seen in Bitcoin's price history. And I mean ever, but we did see a time where it came close in the middle of 2021. This was May, June, July. Bitcoin experienced a huge downturn in price, but then it will recover and hit a new all-time high later in that post-election halving year, similar to 2021, 2025, also a post-election halving year. And so if you just use MACD as, maybe history doesn't repeat, but maybe it rhymes, maybe we just see a little bit of chop followed by another strong recovery. The other thing I want to show you is the daily RSI. The daily RSI hit a level we have only seen 5 times in the past 5 years. So what did Bitcoin's price do each of those 5 times? So to see the last time we had this happen, you got to go all the way to August 2023. And you can see the daily RSI dipping below this teal or turquoise, whatever color you want to say this blue horizontal line is. Let me know down in the comments, is it blue, is it teal, is it turquoise? Now, if you zoom in into that area and you see, exactly when the RSI hit this low, you see similar to today, we have a very strong red candle, very strong outflow. Now, when we zoom in, you can actually see, well, that daily candle looks a lot like today's daily candle, at least so far, but Bitcoin would fall a little bit lower. It would close right here, and then it would fall about another 6%. So let's go back to the second time that we saw it happen. Remember, it only happened 5 times. This is the other time we saw it dip below this line. Once again, Bitcoin would go a little bit lower, just a little bit. And we see here it would wick about 12-13%, a little bit lower. Candle bodies, again, kind of sticking with that 6-7% drawdown. So 12% if you count the wicks. Now we got another one. Let's go ahead and get to the price action here. Now we're looking at, yet again, another deep red candle, similar to what we're seeing again today. Now, if we look at the drawdown, we're going to have something similar here, close to 12%. Candle bodies, coming in around 4% there. So really close to 5% yet again. And then we go back, we got another one, we got a couple more. And we check in on number 3 right here. Hey, I mean, you just see it every time. You just got this deep red candle, but we do go a little bit lower. So now we're talking about, a little bit of a price decline, still under 20%. We fell another 18%. So nothing super major at that point. And then we go to number 4. We got two moves that are pretty close to each other. Right here, you can see, another big red day, but essentially marked the bottom, would only wick a little bit lower. And then we got right here, would mark the bottom for a fairly substantial amount of time. I guess we wicked a little bit lower in December there, but we would go about 50% higher before we would crash to the downside. So let's just look if we got about a 20% drawdown, and let's look if we got about a 6% drawdown. If we fall an additional 6%, and we're going to go from the candle body, not from the wick here, another 6%, you're looking at Bitcoin hitting about $78,000. But now let's do 20% because, that was about the high end that we saw, 20% drawdown. Okay, not as scary as I was originally thinking there. Now we're looking at close to the bull run top of 2021, $66,000, which to me would be about the perfect level. You got everybody going long at 69K, which was the top in November of 2021. And then we wick just a little bit lower, get all those liquidations, make all the market makers money, make all the exchanges a bunch of money. Retail's left on the sideline. They're losing all their money. That's typically when we're going to see a bounce. So there you go. The Morgan Stanley news is pretty bad for MicroStrategy. It is pretty bad for Michael Saylor. But I would say the Bitcoin bottom, I don't think we're going to go too much lower. I don't see a 77% drawdown from 126K. And if you look, we are already down about 33%. So if we do hit this 60-ish range, you're looking at about a 45% pullback altogether. So a mini bear market definitely in the cards. I mean, you could say we're there already. But what do you think? Do you think Bitcoin is going to recover? Are we looking at a similar situation to the middle of 2021? RSI is hitting low. MACD is hitting low. But then we recovered and hit a new all-time high within 6 months. So let me know down below. I'm DZ for Discover Crypto, and I'll see you and your Bitcoin at the top.